everybody. This is another bite-sized educational component for time and price. This is a little exercise that everybody should be doing pretty regularly, and it's all about highs and lows of the week, right? So getting an idea of what high and low of the week is, how it forms. We can really find it in real time, right? So if you haven't watched the long format video, like all the other segments have the short form videos first, but for that one specifically, I strongly suggest that you watch the long format one first. It'll be at the top of this section. So if you've already watched it, good. If you haven't, you really should before getting into any of this, because you won't understand it. Okay, so in that video, we talked about the highs and lows of the week, and we talked about in trending markets. This works really, really well. As you can see here, we are definitely in a trending market. We see here a slowdown in price and then a big bearish candle. So what we're looking to do here is look for that manipulation, right? We're trying to understand that manipulation between the end of 1 week. Sorry, the end of 1 week would be the close of this candle. The end of 1 week to the beginning of the other week to the high. We're just looking to see what happens in this little window of time and what precedes the high of the week, right? So understand that the high of the week in a bearish candle would be a cause of manipulation on the top side, and the low of the week on a bullish candle would be manipulation on the bottom side. Okay, so what we're going to do here is click Alt J, delete this, Alt J. I don't know what that is, Command J, I think, on Mac. And then you're going to grab this tool and click Control. I don't know what that is on Mac either, but you're going to hold down Control as you grab the tool and then snap it to the high of the candle. Okay, so in a bearish one, we're going to snap it to the high because we're looking for that manipulation that set the high of the week. Okay, so from here, what we're going to do is simply drop down into the 1 hour time frame. Okay, you can go down into the 4 hour time frame as well. But I find for this exercise that the 1 hour time frame really gives you a good example, or good, enough data, rather, a very clear representation of what's happening here. So we can see the high of the week formed right here. You can see that this is Monday. It's the highest point in the entire trading week. Friday down here. Price never comes up above here. We're going to look to the left and see what it manipulated. We've come across this old high. And that we've broken down below the low. And this high becomes liquidity, right? So this is the first thing, is that we've taken out an old high, manipulated above it before distributing lower. Following that, we've had an FEG, which we've been selling off from, right? So we have a very clear entry model here just on the 1 hour time frame alone. Now let's pay attention here as well as to price. So what time is this high here? 3 a.m. 3 a.m., that's the beginning of the day. 4, 12, 1, 2, 3, right? And then after that, it never really comes, it actually doesn't come up at all for the rest of that day, right? So if I go up to the daily time frame, pop between time frames and really build a narrative here. And I look at this. Okay, we've actually swept the previous daily high, right? So that is session or time-based liquidity here. Swept above the previous daily high. So prices manipulated above the PDH before setting the high of the week. And we've had bearish candles ever since. Okay. In the 1 hour now. See. Previous daily high also is an old low. So two different forms of liquidity stacked on top of each other. I'd argue this is by design. You believe what you want to believe, but I adopt to that. Let me pull up the bar replay tool here, and we're going to jump in even deeper. Okay, go to the 15-minute. Just see how this distributed out. Let's start studying as well the time. So we have start of London session, fill zone here at 2 to 5 a.m. So it happened in the London session, or sorry, the New York kill zone. High of the week set in the New York kill zone. That's ideal time to see manipulation. Mark out that manipulation here. There's your run on stops. Right here. And then tap into that region again, but we don't come up here. You see 1, 2, 3 pushes up, very typical. And then an aggressive breakdown. We can start to predict that this is possibly the high of the week, if we anticipate a bearish candle, of course. But just understanding how prices developed and pushed into this area of liquidity, this manipulation, before the push down, can really help us to start to see this in real time and then build that higher time frame bias backing all of our trades. Here. At this largest body candle, so we're looking for the order block. This comes into liquidity. This is the largest body candle, up close candle before the down move. We have this little one, but we're looking at this big one. Okay, we have an OB. So reacted. So we've come into previous daily high, also old high, pool of liquidity, displaced out aggressively, giving us a beautiful order block. Big FEG, but nothing really tradable, right? So we're going to look at that order block. Comes into the order block, breaks down, little break here. We're on a lower time frame. Go to the 15-minute. Oh, we're on the 15-minute. Sorry. Go to the 5-minute. See? Oh, it's actually not. So this is just one big aggressive move here. Okay. So we've already had that order flow shift. We have a rebalance here. Let's follow price here for a second. Big push up. This candle rebalances. So you have an ISP here. This gives us a beautiful SMB. SMB. Okay. Beautiful SMB. Pushes down. Pushes up. No liquidity in this leg. But what do we know about order blocks? We understand that order blocks do not need liquidity in the leg to work because they've already taken liquidity. There should be no reason to come above this OB. Comes in, pushes out, again, giving us another FEG. Respected. Coming into that candle that created the FEG. Displacing out. Displacing out. Break structure. Normal break structure. You have ISP. You have ISP. We're filling in balance here. We have ISP. Filling in balance here. These are all. We have a type 1, type 2, a type 2, and type 2. Let's see. What are we potentially drawing to here? We have an old low here. And that's really all I see. That stands out to me. We have this candle here, which we've drawn to clearly. Liquidity below. So this is an order block as well. In an up leg, pause, down move, push up. Clearly having liquidity take. So we've drawn to this liquidity and we're likely to draw down to here. So let's skip ahead here. And it's taking out the low. So just build a narrative here about what's happened at the beginning of the week to set the high before pushing and continuing bearish for the rest of the week, right? Having this bias can help us to having an idea of what's actually happening, having this narrative can help us to form a bias and then even select next likely draws on liquidity to trade to, right? And then we're able to confidently continue to take shorts wherever, the entry model plays out, of course, but we're able to constantly look for shorts without looking for longs, right? Hopefully that helps a little bit.